Welcome to Markets Now. I'm Michelle Rook with Mike Zuzulo, Global Commodity Analytics, and a mostly higher day in grain and livestock futures with the exception of hogs. And Mike, let's talk about soybeans post WASDE. Of course, we did get a nice infusion of some positive news into that soybean market from the global stocks especially, didn't we?
Yeah, we did. And, Michelle, it was an interesting dynamic because we saw a lower yield, but the carryover number stayed the same versus last month. And I think the reaction in the market, both domestically and the global number, would say the trade was ready for a bigger U.S. ending stocks number and a global stocks number that would have been closer to 120, 121 million metric tons instead of the 115 that we got on today's report. So it was pretty clear that the soybeans wanted to be the driver to the upside in percentage terms. Meal also right there with it. And that is something to watch. We had lost about $1 a bushel in lead month soybeans from September 12th crop report to today's crop report, with meal back in the driver's seat helping lend support instead of bean oil. I think this is one of those markets where we may be able to make up that lost dollar, even though I think we may have a higher yield by USDA down the road. But the next 30 days, we've kind of opened the door to the upside up, I believe, especially if corn and wheat can join the party.
Absolutely. And you mentioned the meal market up over $16. And was there anything in particular that drove that meal rally?
Yeah, the 375 area had been a hard place to get below in the December. The October was keeping the December underpinned. I want to say it was mostly the October getting ready to go off the board on Friday, and that arbitrage coming in and that inversion sticking and keeping that December well underpinned. And then when we saw these numbers, that really gave the meal the upside. I don't know if there's something going on in Argentina as well, because I usually equate meal with Argentina.
Absolutely. So we made new lows for the move in soybeans prior to the report. Does today actually forge the harvest low? And then where are you watching in terms of the next area we need to close to keep this momentum going?
Yeah, excellent questions, because this was, at the end of the day, a supply-led market rally. We didn't add to the demand. We took away from the supply. And so it's still weather supply-led. That equates to me, rallies should still be hedged. As to the low, I do think that the soybeans could be putting in a 30-day low here. Much depends upon the feed grains, because I'll call wheat the leaky bucket at this point, because it has been most of this year. The USDA's numbers keep it that way on today's report by adding U.S. ending stocks. If anything's going to give up because of macro fundamentals and supply-demand fundamentals combined, it's still going to be the wheat. So if wheat comes in and shows us a sentiment change, I think beans will readily pick up on that.
Yeah, and unfortunately, there wasn't anything necessarily friendly on the domestic side for the wheat in the report today, was there?
No, there really wasn't. I think this is where the USDA is really pumping up the volume on the yield. I don't see it as far as the hard red wheat and the soft red wheat. I think they're overdoing it at this point. But other than that, I think USDA has done a terrific job this year on the supply demand statistics.
Yeah, you said yield up 3 BPA. That is a pretty good hike. But do you think most of that bearishness is already priced into this market?
I really do, especially given that we're so far advanced and being done with harvest and getting ready for that southern hemisphere market. And I think also on the world numbers, USDA did take Australia down. I think they took someone like a Kazakhstan down as a major importer, but they really didn't touch the EU. They didn't touch Argentina. They could have touched several countries as far as knocking production levels down, especially with CPC coming out just today and saying, look, we're looking at a 80% northern hemisphere El Nino sticking around all the way into possibly May of 2024. So that begs the question of what's happening with the Russian and the Ukrainian wheat as well. So I do think we're looking in the rearview mirror with these numbers on wheat.
Yeah. Middle East conflict, does that play into this wheat market, or what role does it play going forward?
It's going to play a big role in everything. If this war expands, history would suggest it will, because of the 1970s, early 1980s. I would not be surprised at a $40 or even a $50 rally in WTI crude if this war becomes a regional war and all of a sudden the OPEC countries turn more towards their Arab roots and they support the Arab mindset versus the Western mindset like they did in the 70s and 80s. we've also got this Fed policy wrapped up in this, Michelle. If we go sharply higher in the crude with these kind of interest rates we're dealing with, will that finally sign the death warrant for raising interest rates? And the Fed really finally starts to say, we're hitting the sidelines, we're not going to raise rates anymore. And that could turn the dollar weaker with a stronger crude market. And I think that'd be very positive indicators to the investment funds for commodities.
Yeah, it's all woven together. Okay, the corn down 110 million bushels on U.S. ending stocks are still above 2 billion bushels. That's going to be a headwind. And then you also suggest that until the wheat market bottoms, it's pretty hard to get much traction.
Yes, exactly. Especially until we get over the 60% mark on the corn and we see where we're at on the Mississippi River. The thing about the corn report today I liked a lot about USDA was they did take that Minnesota and Iowa number, both those states, down this month. I could actually see them doing that again. So I'm actually in a little bit of a contrarian mindset where I think that 173 number that USDA gave us is very solid on corn, could even go just a tad lower. Whereas the beans, I could see it going either way and actually probably leaning towards a higher number. So I'm at a 1819 carryover for corn on that. And I think the export demand side of the equation is going to come on in the corn after January.
An update on the cattle market. And of course, that was pushed by some $3 higher cash trade. But let's talk about the fact that we were able to rally despite maybe a little bearishness in the WASDE, right?
Yeah, I would say you did not feed the bull. You are, at historic highs, still justified by the cash market moving, but I would say rallies are still meant to be sold. And if we see spike in crude oil and we see no dollar going down, that's going to hurt our consumption. USDA showed that. They took our exports down in beef, they took our imports up, and they took our production up. So we had a pretty large increase in the net supply today versus what we saw in September. And I don't agree with all of that, but if feed stays cheap and cattle prices stay high into February, March, then I could see a little bit more production. However, the futures market's probably well ahead of this at this point.
Yeah, that's right. We're seeing the futures at a premium. So even though we have cash trade that may continue to move higher here and get into tighter supplies, do you think we'll go back and retest the highs?
I think it's possible. I think the fat cattle have a better chance than the feeders if the corn market wants to turn around with the beans and with the wheat. That 251 area in the feeder cattle market is a really crucial level. That's an area back from 2014, 2015, and that's an area we've been testing here recently. So I think that's a big number to look at on a monthly basis.
Yeah. And as I said, hogs were mostly higher, I think, except for the front month. Did we just follow cattle today in that rally there, or what was going on in that market?
Yeah, I think that, and I think we follow the bean market as well. That pork and bean trade's been very, very strong. I would be surprised if we stayed in that mindset where the hogs and the beans rally together. I just don't see that right now unless China makes a big policy change.
But the WASDE was not necessarily friendly on pork either, was it?
No, it wasn't. We had a net of 530 million pounds added to the pork side of the equation as well, even with higher exports put in.
And even though we had all this news today, we should also talk about the CPI that was out a little hotter than expected this morning. So what does that mean going forward? You kind of talked a little bit about the Fed policy here earlier.
Yeah, what stood out at me was the food number annually and the overall CPI annually were about the same. They're still running about plus 3.7%. The overall CPI and the core CPI, you can see very clearly on an annual basis, the housing, the rent markets, those are the things that I think the Fed are trying to attack. But I think they're going after something that they're not going to be able to use with such a blunt instrument. I think this is more of a supply-driven inflation. So I'm encouraged by some of their comments this week. I think they are on the verge of saying, let's stand aside for right now.
Thanks so much. As always, Mike Zuzulo with Global Commodity Analytics, and that's Markets Now.